and welcome to Pro Trader Strategies market commentary for Friday, May the 22nd. Some of you may not recognize me as of recent, but yes, I did get my hair cut. I'm Eric Wilkinson, and I'm here to talk about economic and geopolitical environments, how that impacts the overall market with my market analysis, but I also layer on top of that some option strategies I find in order to implement into my portfolio to increase that overall yield. It's really the best way to outpace just the S&P 500 or any of the other benchmarks therein of. Well, let's talk about the other economic data we got going on. Actually, there's really no economic data today. Heading into a holiday weekend, we got Memorial Day weekend coming up, and that is going to be an extended weekend here in the United States. Monday will be off. So I think we're probably going to see a little bit more weakness in the overall markets. We got a bit of a mixed bag right now, but we're seeing crude oil trying to make a bit of a comeback here. That's probably on the expectations that we're all going to be driving. I mean, we've been stuck in quarantine. We've got Memorial Day weekend. People are probably going to be going out. Well, that is probably what is overhanging in the equity markets, is the fear that there's going to be some outbreaks with all of us getting out and socializing. Anyway, crude oil down about $1.35. I talked about this. We get into this 30 handle, and I don't know that we can really sustain that right now. We got to keep in mind that we are seeing huge unemployment across the board. Not a lot of people are probably going to be driving, although albeit a few of us will be. I don't know that that's going to really be enough to drive the demand up for crude oil. It's really going to be a product of these manufacturing sectors opening up. That is really the consumer of this crude oil, or some of the distillates that go into the making of plastics and things of that nature. All right, gold up $11 today. It's trying to toggle back and forth between this 9-day simple moving average. We settled below that, which shows short-term weakness going forward, but right now we are butting up against that 9-day moving average. As you can see here, I think that we are right in line with where we should be. I've talked about this time and time again. The 1787 area is going to act as that resistance band, and 1650-ish is that support area. Really around 1700 is where I like to call it, but I think that we're going to continue to see that toggle back and forth there. I don't really see a blast off happening here in crude oil anytime soon. One could say we are starting to build a bull flag here. Excuse me. As we would see something like a line here. Let me get rid of that and draw it differently with the marker here. But we've got a line going here and a bit of a line going there. So the idea would be that if we break above this line here, for instance, a green rally breaking above that, that would be very bullish for the gold futures. All right, so but in the meantime, I think that we are going to really kind of stay between these areas here and build out a bit of this volume here. We're starting to see the volume really slack off here. Time spent there, that is acceptance of value there. We're not trying to push out of that at this point in time, but we're just not seeing that volume. We're not seeing that change of hands with this market here, and it's just getting very complacent. And then let's move on to the bonds here, or I don't know where my bonds chart went. Let's pull up the bonds. Bonds right now stuck in that 180 handle, and I've talked about this time and time again. It is where value is created as well. We are seeing this market want to stay within this area in and around here. I've talked about it. I think we're going to see more and more volume build up and time spent here as the market has priced in bonds going forward. This is futures. I don't know that we're going to see negative rates in the short term. Fed fund futures, 2-year, 5-year. I don't think we're going to see those negative rates. We're starting to feel like we are getting, in a groove right here. That's where I think the value is going to be created for a longer period of time, and don't think that we're going to see this really break out anytime soon. So pretty boring with those. Anyway, VIX coming off of the highs, which was in the 30s again today. And that was because we started out the day pretty much all across the board in negative territory. Overnight session was pretty balanced, but we've got the Dow Jones Industrial Average off almost 50 points right now, but well off the lows of the day. I don't think that we're going to see a massive rally here. I think we're probably going to feel like we're going to be pretty much unchanged going into the weekend. I don't think a lot of people want to put on big positions heading into an extended weekend here. I think it's going to be more of pairing off some of these positions. But you can see here with the NASDAQ, overnight basically went down and tagged that 9-day simple moving average, found support there. Coming into today without any economic data, markets feeling pretty good at this point. E-mini S&P is pretty much unchanged, but again, bounced off its 9-day moving average. And I've talked about it. We are starting to see this. So market is creating or finding value right in and around this middle between 3,000 and 2,900. I've talked about this for months now, it seems like, that I feel like we're going to see the market start to build in this volume node and contract where our points of control are. Right now we've got the time right down there at 2,900. We've got the volume up at 3,000. That's where we're seeing a lot of selling pressure happen, a lot of changing of volume happening up there. That's also where the 9-day simple moving, or sorry, the 200-day simple moving average lines up with our value area point of control, I should say, for the volume. Now, to break above that would give us a lot of room to the upside, I think. But at this point in time, you know, I think that there's people out there that want to kind of wait and see how these opening ups of the different states are going to go before they start really piling into things like the E-mini S&Ps. NASDAQ's a bit of a different story, and I've talked about that. That includes a lot of stocks that we're going to be using in and around our home offices. So that one has been pushed to the upside, and that's probably about right. I still think it might be getting a little bit frothy up there, but having said that, you know, a lot of us are still at home, working from home, and a lot of companies are going to allow that going forward, all right, that social distancing, working from home, but that means that people are going to be building out their home offices, all right, and they're going to be expanding, getting cameras, getting new microphones and things of that nature, all right, so those types of, or maybe even a new computer when they realize, gosh, my computer's slow, or I need another screen and my computer can't handle that. So all of those things are going to be things that really push that NASDAQ there because it's very tech heavy. All right, as we can see with the E-mini S&P still unchanged for the most part, but overnight pretty balanced. They flushed themselves out. We got bearish, and heading into today pretty much flushed out the shorts, and I mean, darn tight range there. As you can see, we really haven't moved all day. I think we're going to start to see volumes really start to slough off. It's Memorial Day, it's summertime, and we used to say on the floor that it was a rush to the Hamptons. We're going to start seeing that on Fridays, where those volumes really start sloughing off late in the afternoon, and that usually means that the market just trends sideways. You know, coronavirus going to be a completely different beast, though, so we'll have to see how that starts affecting the overall markets. Now, with my position, I'm pretty happy with it, so I'm not going to do anything at this point in time. We did do the broken wing put butterfly. I go into all those rules as to how to set that up. You know, if you are market neutral, like I was talking about with maybe gold, and you're worried about the upside, but you're not worried about the downside, that could be a good opportunity to put on a broken wing put butterfly, where if the market rockets higher, you aren't at risk of losing any money because of the way we build that out according to my my methodology there. But if it trends sideways, we can hit our max profit and you know, pocket that cash. All right, that's all I got for you guys. I hope everybody has a great and safe, wonderful Memorial Day weekend. Unfortunately, I am an Indy 500 guy, and this is the week weekend that we used to look forward to. Today would have been Carburation Day, and they are not having that head off. So a little bit bummed. That's what I used to always look forward to on Memorial Day weekend. So other than that, stay safe. And if you haven't heard, we have a disclaimer that we need to go over. Please take a moment to go over this disclaimer and know that there are risks to trading. All right, so have a great weekend. And if you can't take that, take it easy.